Tom Lee is back at it again, explaining why the market may be finding a bottom. His argument is that the market cannot keep going lower. Now, Tom Lee is a perma bull, but I think it's incredibly important to recognize that Tom Lee also has some really good macro insights. And although he's been wrong for pretty much all of 2022, every single time we had a bit of a rally, he was like, oh, yeah, it's going to keep going up. You know, you can't blame the guy. He's trying to do his best to analyze. In fact, to be honest, none of us really know what's happening. The S&P went from 375 down to 348 last week. Now, then it rallied a little bit back up to 365-ish, then ended at 357. No one knows what's going to happen. Some people are bearish, some people are bullish. Let's take a look at what Tom Lee says about the market. Here we go. It's unrealistic for investors to say markets are going straight down. Fundstrat's Tom Lee.
Mark and I talk frequently. We have a huddle and we spend a lot of time in each other's offices talking about markets. Mark's view does reflect how poorly technicals are. I mean, you know, price is the arbiter and the market's been in an ugly downtrend, which is what Mark's speaking to. But price can change if fundamentals change. And I think in between now and year end, as much as investors are glum and pessimistic, there are things that present themselves as things that can change how price reacts. I mean, I think foremost, I think there's still a growing gap between what is apparent in terms of inflationary leading indicators, whether it's commodities, job openings, home price, market rent for new properties, and how it shows up in the hard data. Now, granted, the Fed is not trusting forecasts, so they rely on the hard data, but that gap is still growing. And the second is there's a lot of geopolitical risks around.
So first thing you just said is that there is data showing, this is kind of the Cathie Wood argument, that inflation is going down, that deflationary risks are becoming more apparent. Obviously, commodity prices going down is probably the biggest argument. But his argument is that the Fed doesn't really care about that. They are looking at stuff that's more concrete in their eyes. And in their eyes, the things that are more concrete are not going down. In fact, they're getting worse, which is why the Fed might end up not pivoting. It is almost guaranteed we're getting 75 bips in November, maybe 100, and then we'll see what happens after that.
Around oil and energy prices, and so much of the inflation and the surge and the change in expectations have hinged on oil, which means if we have any resolution on either the war front or on oil supply, I mean, I think it's been kind of interesting that OPEC announced a pretty big production cut and oil has barely increased. I think that just tells you that as much as energy is...
Granted, oil did go from like 320 in my area to like 360, but I get his point. It's not like 490 anymore.
Still a wild card and investors are worried about it. I don't know if it's as much an upside skew as people think, but those two represent pretty big, you know, potential game changers for how people view market direction.
I understand, but I still have a hard time. It's almost like the play caller and the quarterback are not on the same page, right? Bounces will likely prove short-lived. That's from your chief technician. Do you disagree with that?
Again, Scott, it's time frames. I wouldn't say I'm disagreeing with Mark, but
Tom, he says that he basically says we're going to go back to the lows before a pullback back down to the lows
actually,
gets
Scott,
underway.
Just to be clear, that's, if you read the complete note, that's not true. He actually lays out different paths, but the path that's being read there is one of the directions. So I would just say it is actually a lot more balanced than what you're describing.
Tom Lee's a very interesting guy. Fundstrat, you know, so a lot of these managers of money and institutional investors, research companies go on CNBC because they get access to distribution. This video has 100,000 views on YouTube. A lot of the other CNBC videos can barely crack 1,000. Why? Because people like Tom Lee. They care about Tom Lee. Tom Lee has developed his brand. So, I mean, he's been a branded kind of perma bull, and so when his, you know, chief technician is saying, yeah, but we're not really gonna have a bull run, and then Scott calls him out on it, he's actually saying, no, the report says there's a lot of different ways we get to a bull run, and there's different things to think about. But, you know, it's interesting to think about him as a figure in the markets, basically being looked at as a perma bull.
Oh, I'm just quoting. Bounces will likely prove short-lived and might not exceed 38.50 before a pullback back down to lows gets underway. I mean,
it's in the same note that talks about S&P potentially a path towards 4,300 as well. So again, I'm just saying that within that same note, there are multiple paths, but you're just highlighting one of the paths.
I want you to react to another a comment that I saw from Stephen Geiger. He's a fixed income analyst at Nomura, and he looks at that reversal yesterday, to which you suggest it was bullish. He says, and I quote, "Yesterday was incredibly bearish in my view, even though most think bullish. That massive reversal took out tons of hedges, puts were closed, bears were purged, opens the door for a much bigger decline in the immediate term." What's your reaction to that, Tom?
Scott, I mean, that's a trading comment, and you know how markets trade in the next day or two or a couple weeks. I wouldn't disagree with those points, but to me, again, I think that there are potential fundamental positive catalysts between now and year end. And so I know that there's price and momentum's negative, but it doesn't mean that that's going to necessarily govern what markets do the rest of the year. It's the same reason people can overlay charts of today versus 2008 and sort of treat that as canon, and that's the direction markets are going. But of course, that's not the only overlay one can do. So Scott, I'd say there's positioning, and then there's technicals, but then there's also fundamentals and macro. So as much as investors are betting that it's only going to be technicals or positioning that matter, there are other factors that can drive markets.
Tom, look, I've asked you a bunch of those questions regarding you and Mark, and I know you frankly, you sound exasperated with me, but there are a lot of our viewers who are exasperated with you. And the fact that you have such a lofty price target, despite what seems to be blaring in front of all of us, that there's no way to reach some of those lofty levels because of this.
He's calling him out on the fact that Tom has said many times the S&P will go back to 4,800. Obviously, again, you can't hold it against them. All of us are wrong, but I guess he's calling him out on it, saying it publicly to a lot of people.
Significant issues that are in front of us. I'll give you the last word. I'm happy to do that. But how do you square that? Because when we have you on and you continue to make these bullish cases in the face of short-lived reversals that seem to be nothing more than bear market bounces, it leaves some people questioning whether they should listen to the advice or not.
That's fair, Scott. I mean, the market's endured a lot of damage in the past month. You know, it's going to be difficult because there is a time window here between now and year end. But at the same time, let's say that our targets are unrealistic, which it is. I also think it's also unrealistic for investors to say that markets go straight down. So, you know, it's been tough. It's been a tough year. Unfortunately, you know, I kind of wish markets were performing better, but we're in a tough situation with inflation, and that's been a pretty tough monster to slay.
Yeah, I don't think Tom actually answered the question there. So, I mean, the argument that the host put out to Tom is like, look, you said, I mean, like literally watching that whole 5-minute video, I don't understand why he's bullish. His only argument is like, there's no reason markets can keep going down. And it's like, I don't think that's an answer to the guy that said, wait a second, you said the whole year the markets were going to go up. Why do you still say the markets are going to go up? I mean, like, is there any, at least when you ask Cathie Wood, her argument is deflation, right? Her argument is deflation is going to cause the Fed to ultimately have to make a pivot and then blah, 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 stocks boom. I mean, that's kind of the argument he made, but in the last question, he was just like, well, you can't expect markets to keep going down, so that's why markets have to go up. And it's like, wait a second, that doesn't really make that much sense. And I love Tom Lee, right? I love his macro insights, great analysis, but I think he kind of finally admitted inflation is really bad. The market's gotten hammered because inflation is really bad. And as a result of that, there's nothing we can do other than wait and see what happens in the macro. But I don't think Tom Lee or any other bull, quite frankly, has a great argument for why the market should keep going up. If your argument is it's oversold and it's going to keep going, it can't just keep going down. It's like, what if it does? And again, I'm not trying to be a bear here. I don't know if it's going to go down or going up. I'm long on pretty much all my positions. I don't have any puts on the market. So to me, it would be great if the market goes up, but I'm also not delusional. I'm also not buying this dip like crazy just because the market's down. It's like, you don't know what you don't know. And it's interesting to see Tom not really have an answer for why the markets go down or should go up, other than it can't go down. It's like, that's not an answer. So I guess we'll see what happens. Let me know your thoughts. Let me know what you think about Tom Lee and his thoughts on the market. Thank you so much for listening and watching. I'll see you on the next one.